Hi everyone, it's Adam here, and today I wanted to talk to you about investing in property through a limited company versus investing in your personal name and what's the differences. So this is a question I tend to get asked a lot, and I think it really depends on your personal circumstances as well as your goals and ambitions with your property investments as you move forward. So as you can see, I've put together a little Excel because the best way to talk through this is through an example. So I've assumed a rental income of £12,000 per year on your investment property. I've assumed mortgage interest of £6,000 per year and a management fee of 12% and a maintenance cost of £600 per year. In addition to that, if you've bought the property in a company, you'll have to pay an accountant to do your annual accounts, and I've assumed a cost of £1,800 for that. Now, as you can see, the net profit on an investment property through a limited company would be just over £2,000. However, the net profit in your personal name would be just under £4,000, and that's because it's much more profitable in your personal name at this scale when you're only investing in one property, because you're not spreading the cost of the accounting fees across those investments. So that's the main difference between the costs at that point. Now, if you own it through a limited company, you can see that there's a corporate tax that you'd pay. So I've assumed the upper limit, which is 25%, but it is on a sliding scale. Now, after corporation tax, you would be left in your limited company with just over £1,600 in profit. Now, if you're an additional or higher rate taxpayer, this is where the question stops. There is no point owning investment property in your personal name. As you can see, the higher rate taxpayers would only make a profit after income tax of just under £700, which means that it's much less profitable to own investment properties in your personal name as a higher rate taxpayer. So if you're a higher rate taxpayer or additional rate taxpayer, it makes much more sense to purchase your own properties through a company. Now, you might say to me then, oh, well, I'm a basic rate taxpayer or I don't have any other income, so then does it make sense for me to own my properties in my personal name? And the truth is, at this kind of level, potentially it does, right? If you are earning less than the 50 grand per year and including the profit in your properties, you will be better off if you're investing in one property, owning it through your personal name. So if your aim is to just own one investment property and you don't see yourself going above those limits, the numbers make more sense to own that property in your personal name. Now, there is a few caveats to that as well. The first one being that if you do own your property in your personal name, you can still withdraw that income at the lower tax bands from your company and not incur the tax. The only additional cost here is the accounting fees. So if your ambition is not to invest in more than one property of this kind of size and scale, then that's fine. But if you are looking over time to invest in more properties, let's now change the scale to 2. So if I bought 2 of these properties, now you can see that if I was to leave my profits in a company, I would make £4,500 per year, whereas if I had owned these investments in my personal name as a basic rate taxpayer, I would be paying I would be left with £4,300. So even at just the second investment, and if you're not going to be withdrawing that money out of your company, it makes more sense to invest in property through a company rather than owning them in your personal name. So if you're looking at building a portfolio over time, again, it's straight away the obvious route is to own property and invest in property through a limited company rather than your personal name, because as you build that portfolio up over time, you will be going over the basic rate, and it will make more sense to pay corporation tax rather than income tax on those profits from your company, especially with the fact that mortgage interest is no longer deductible if you own it within your personal name. However, However, if you are looking to just invest in a couple of properties, or you have a pot of money where the return of your net profits wouldn't ever get you over your personal allowance or you and your partner's personal allowance or over the basic rate of tax, it is a question whether you set up a company or not, because the numbers don't differ that much at those kind of ranges, and it is simpler and cheaper in terms of mortgages to own properties in your personal name rather than in a company name. However, if you are a higher rate taxpayer, or you foresee that you're looking to build a pot over time that will exceed the basic rate tax threshold, then it makes 100% sense to purchase your properties through investment company, as well as if you're looking at in terms of adding your kids on to that company as well, also employing any staff to help you run that portfolio. It does make a lot of sense to then purchase those through a company. I hope that's been useful, and if you've got any other questions, feel free to reach out. Thanks.